Hello everybody, welcome back to Stacking Cash. Today, the NIO news continue. If you're new to the channel, I would like to welcome you and feel free to subscribe. If you're not new to the channel and you're a regular, welcome back. I'm glad you're here once again. We're not gonna waste any time, we're directly diving into the NIO price target and the current NIO fundamentals. Will NIO be able to recover in 2022? NIO has lost as much as 43% of its value this year, buckling under mounting pressure from ongoing supply chain challenges and a large regulatory overhang on US-listed Chinese stocks. Yet, the underlying business fundamentals have continued to show strength, with robust delivery volume growth amidst a protracted chip supply shortage. The EV maker is slated for further share gains this year, with the rollout of its first sedan models and continued expansion across Europe, buoying additional market penetration. NIO's upcoming launch of a lower-priced sub-brand is also expected to drive further mass-market adoption of its vehicles, underpinning greater market share growth beyond the premium EV cohort. With NIO's increased addressable market enabled by new vehicle models and an extended geographic footprint being a material growth catalyst in the near term, the stock is slated for a turnaround later this year, making it an attractive investment at current price levels. NIO Stock, ticker symbol NIO, has lost as much as 70% of its gains since peaking at close to $67 last January. The ongoing market sell-off, stoked by dampening market sentiment over burgeoning macroeconomic headwinds ranging from sporadic coronavirus variant outbreaks and related supply chain bottlenecks to rising inflation risks and signs of an economic slowdown, have further steepened NIO's declines this year. The stock's value has plummeted by as much as 43% from peak to through on a year-to-date basis. It briefly broke below the $20 level last month as part of a broader sector declines led by a Tesla sell-off after it reported record financial results that were overshadowed by the continued impact of supply chain constraints on the expansion of its product roadmap. Yet NIO's fundamental performance has remained robust despite a protracted chip supply shortage that has upended the automotive industry over the past year. The Chinese EV maker delivered more than 25,000 vehicles in the fourth quarter of 2021, which was near the higher range of its original guidance of about 23,500 to 25,500 vehicles. NIO's production volumes in the fourth quarter were off to a weak start, delivering only 3,667 vehicles in October. This was due to the closure of its JAC NIO production factory between September 28th and October 15th for manufacturing line upgrades in preparation for upcoming new vehicle program introductions, including the ET7 and ET5 sedans, as well as a recently introduced ES7 SUV. But delivery volumes picked up swiftly in the months after, growing 105.6% year-over-year in November and 49.7% year-over-year in December. January 2022 delivery volumes also grew 33.6% year-over-year to 9,652 vehicles, despite additional pressure from labor disruptions and supplier factory shutdowns caused by the Omicron coronavirus variant outbreak across major cities in China. In addition to proven strength in navigating through unprecedented production challenges with continued volume ramp-up, NIO has also maintained robust consumer demand, with new orders reaching all-time highs on a monthly basis, with the continued rollout of the new models and complementary services ranging from improved advanced driver assistance systems (ADAS) to state-of-the-art battery swapping technology and ongoing expansion of its presence in both high and low tier cities across China and overseas. NIO remains one of the best equipped EV pure plays on the world stage, as NIO continues to demonstrate strength in capturing growth opportunities arising from the EV revolution that is now arriving in full force worldwide and not just in China. The stock is expected to re-emerge from recent lows within the near term. But why did NIO stock drop? Bogged down by protracted supply chain constraints and a pronounced regulatory overhang on US-listed Chinese stocks, NIO saw its stock value plummet as much as 59% in 2021, from a high of $67 in January to a low of $27.52 right before the year ended. The stock's performance particularly worsened entering into the new year. Broader market sentiment has continued to dampen on mounting macroeconomic headwinds that include rising inflation risks spurred by a range of factors including pandemic-driven supply chain bottlenecks and geopolitical tensions between the West and Russia on the latter's potential invasion of Ukraine. Even today, China-specific challenges including an ongoing broad-based regulatory crackdown and signs of slowing economic growth in the region have also added incremental pressure on US-listed Chinese stocks just like NIO. NIO stock has declined as much as 43% this year, compared to domestic peers like Li Auto and XPeng Motors, which are down 34% and 41% respectively over the same period. Global EV leader Tesla also remains in the red this year, plummeting as much as 34% on a year-to-date basis. Meanwhile, major benchmark indexes like the S&P 500 and tech-heavy Nasdaq 100 have declined as much as 10% and 15% respectively on a year-to-date basis, which indicates that the broader EV sector has continued to underperform the broader market. Considering the current economic backdrop, it is unsurprising that the broader EV sector has been a market underperforming. As an emerging segment within the consumer cyclical sector, near-term headwinds like rising inflation risks and signs of a potential economic slowdown certainly do not bode well with its outlook. The greater automotive industry was also impacted the most by the ongoing semiconductor shortage. The market predicts close to 8 million fewer vehicles sold in the past year, or more than $210 million of lost revenues, which adds to the rolling list of challenges like already surging raw material costs. Lithium, a key raw material in EV batteries, saw its prices increase fivefold over the past year due to rapidly accelerating EV sales. In China, NIO's largest market, lithium carbonate prices hit new records in January alongside a steep 35% jump in the region's EV sales from December. The BNEF now predicts a 2% rise in battery pack prices this year, potentially pushing out the point at which EVs will reach price partially with ICEs to 2026, 2 years later than its earlier forecast. But with EV adoption now an imminent theme for the future of transportation, tremendous opportunities remain on the horizon once the sector overcomes the aforementioned challenges. Despite signs of slowing consumption in China, with new car registrations down 4.4% year-over-year last month, the region's EV sales have remained resilient. Specifically, Chinese EV registrations have more than doubled last month to 347,000 units compared to the same period last year. The China Passenger Car Association now predicts EV sales to reach 5.5 million units by the end of the year, up from a previous forecast of 4.8 million units. And looking ahead from a global standpoint, EV sales are expected to exceed 40 million units per year by the end of this decade, with the Chinese and European markets to dominate. This makes strong tailwinds for NIO as it continues to grow its global market share through expanding its presence across the two leading EV markets, while also rolling out an extensive product roadmap that covers different vehicle and pricing segments to capitalize on diverse market needs. And what will happen to NIO stock in 2022? Continued overseas expansion and new product rollout will remain key themes for NIO this year. Following the success of its expansion to Norway last September, NIO will begin operating storefronts and start shipping to Germany, the Netherlands, Denmark, and Sweden this year to further penetrate growing global EV opportunities. Being one of the first regions to embrace and promote EV adoption, Europe is currently the world's second largest EV market, second only to China. While Europe's new car sales continued to decline for the 6th consecutive month in December due to lingering supply chain constraints, EV sales in the region continued to post robust growth. The trend was especially prominent in Germany, with 2021 EV sales tripling from the prior year to account for about a fifth of the country's new car registrations. EV penetration across Europe is expected to rally towards 40% by 2025 and more than 50% by the end of this decade, as leading regions like Germany continue to show strong signs of acceptance for the emerging mode of transportation. This, paired with favorable EV demand from NIO's core Chinese market, as mentioned in the earlier sections, means the EV maker is expected to catapult its order book towards newer heights this year, underpinning stronger valuation prospects ahead. With the Chinese government's subsidy program coming to an end later this year, local EV sales are expected to see a push at the last hour in the fourth quarter, and considering NIO's proven ability in navigating through tough production challenges and an expectation for automotive supply chain bottlenecks to start easing in the latter half of the year, the Chinese EV maker remains well positioned for capitalizing on the near-term opportunities ahead. The rollout of the new vehicle types this year will also further NIO's reach before the Chinese EV subsidy program ends, underpinning greater share gains ahead. In addition to the ET7 full-size sedan that will begin shipping later this quarter, NIO has also unveiled the ET5 mid-size sedan during the 2021 NIO Day event in December, which will begin shipping in the fall. The third all-new 2022 EV model, touted during the second quarter earnings call in August, was also confirmed recently to be the ES7 5-seater SUV, which will be unveiled in April and begin shipping before the end of the year. The all-new ET7 and ET5 models will allow NIO to penetrate the premium sedan segment for the first time, which is expected to further its market share and, inadvertently, drive additional top-line growth over the longer term. Meanwhile, the all-new ES7 aims to be a direct competitor to the BMW X5, a hot seller within the Chinese premium SUV segment. Looking beyond 2022, the impending rollout of NIO's sub-brand is expected to compensate for the anticipated slowdown in demand for its core brand premium offerings following the end of China's EV subsidy program. As management had discussed during the second quarter, the sub-brand will aim to offer more affordably priced vehicles to drive higher mass market appeal. The strategic move is expected to help NIO compete for higher market share, especially in the price segment of Tesla's Model Y and Model 3, while providing much better service. NIO's core brand premium offerings already shows robust market penetration in China's Tier 1 and Tier 2 cities. The upcoming launch of a separate brand with diversified and competitively priced models is expected to further its expansion in the world's largest and fastest growing EV market through small Tier 3 and Tier 4 cities like Inner Mongolia and Heilongjiang. NIO's anticipated launch of its own insurance services is also expected to compensate for the removed EV subsidy program by lowering total ownership costs for its buyers. Data shows that the EV maker has recently incorporated an insurance brokerage company in Hefei, Anhui province with a registered capital of $7.9 million. The company's scope of business includes insurance brokerage, insurance agency business, and insurance valuation business, and is wholly owned by NIO Holdings. NIO's insurance arm is speculated to offer its vehicle buyers with an exclusive insurance product for its vehicles in response to China's latest new energy vehicle insurance terms, which will be less expensive than traditional car insurance. While there have been few details on what NIO's insurance business will entail, the venture could potentially open up its doors to offering telematics-based auto insurance programs in the long run, which provides better quality of coverage and cost efficiencies from both the underwriters and consumers' point of view. Telematics-based insurance uses user data collected from connected vehicles like NIO's to tailor the quality of coverage and lower after-sales costs for buyers, and the product's replacement of traditional auto insurance is viewed as imminent. NIO's potential offering of telematics-based insurance could further bolster its name on the world stage, making it more comparable to globalized EV pure plays like Tesla, which currently offers telematics-based auto insurance in California and Texas. In addition to NIO's expanding vehicle lineup, the EV maker has also continued to invest in its technology roadmap, which now includes the hybrid 75 kWh battery cell. This is expected to drive meaningful margin expansion for NIO in coming years by helping the company hedge against rising costs of commodities used in batteries as discussed in earlier sections. The upcoming deployment of NIO's all-new 150 kWh solid-state battery packs announced during NIO Day 2020 is also expected to drive further traction to its Battery as a Service (BaaS) battery swap subscription service. The newest 150 kWh solid-state battery pack which is slated for deployment in the fourth quarter of 2022, will take NIO's range capability to newer heights. The first generation ES8 will be able to achieve more than 450 miles of range on a full charge with the new battery pack, while the newer and more efficient models can get a range of up to 620 miles on a single charge. This would top current record-holding Lucid Motors' range capability of 517 miles on a single charge. The latest innovations made to NIO's suite of battery technologies are expected to bolster its recurring BAS revenues in the long run by making the program more attractive with extended battery pack options to meet different user needs, especially as it continues to deploy additional power swap stations outside of China. And on the supply front, NIO's expanded production capacity at NIO Park is expected to come online in the third quarter, with equipment installation at the new manufacturing facility now underway. Total annual production capacity will jump from about 240,000 vehicles at the current JAC NIO manufacturing facility to 600,000 vehicles upon completion and subsequent production ramp-up at its NIO Park facility. The expanded production capacity would further complement NIO's ongoing growth plans of acquiring additional market share from different vehicle and geographic segments through expanding its vehicle lineup and global presence. Based on NIO's latest average selling price of approximately 350,000 RMB, its maximum annual production capacity would be sufficient to support total revenues of more than 212 billion RMB, or 33.2 billion United States dollars in the long run. And now the most important part for any investor: is NIO stock's valuation fair right now? The company's consolidated sales are expected to grow from 8.8 billion United States dollars in the current year to 56.8 billion by 2031. Much of the company's growth will continue to be led by vehicle sales, while higher margin other sales related to complementary energy and service package sales are also expected to pick up, with greater expansion of its availability in coming years. Combined with NIO's projected cost structure, which takes into consideration its continued ability in upscaling productions, selling higher margin service packages, and achieving incremental cost savings through ongoing technological advancements, the company is expected to incur narrowing losses from $771 million by the end of the year to $748,000.6 million by 2024. Profit realization is expected to begin in 2025 at 99.2 million United States dollars, with further growth towards $9.8 billion by 2031. The valuation analysis considers NIO's recent developments from an operational and financial perspective, as well as its continued strength in gaining meaningful market share within the emerging EV industry through expansion of its product roadmap and global presence. Nonetheless, the volatility is expected to remain the theme for NIO in the first half of the year. The stock's price movements are expected to remain turbulent alongside the broader market in response to ongoing developments over pandemic-related disruptions to supply chains and risks of an economic slowdown with rising price pressures. But momentum is expected to pick up in the latter half of the year when supply chain constraints within the broader automotive industry are expected to ease, alongside anticipated growth momentum buoyed by the rollout of NIO's new vehicle models later this year. Further detail over a potential Hong Kong listing later this year is also expected to alleviate some of the pressures related to the delisting risks of the stock. A secondary listing in Hong Kong is expected to bolster investors' confidence in NIO, as it would provide an alternative investment channel should its ADRs get delisted from the US stock exchange. Meanwhile, regulatory pressures stemming from Beijing have remained less pronounced for domestic EV pure plays like NIO compared to other internet stocks in China. NIO's growth trajectory is not expected to experience any significant adverse repercussions from China's ongoing regulatory crackdown. The Chinese EV sector has continued to prove its resilience by showing greater tolerance for higher valuations, amidst the ongoing sell-off of Chinese stocks, underscoring investors' confidence in China's growing EV market. And considering the importance of EV adoption in China's journey towards becoming carbon neutral by 2060, domestic EV pure plays like NIO will continue to benefit from accommodative industry policies from Beijing, underscoring a robust growth outlook ahead. Is NIO stock a buy, sell, or hold? NIO is well poised for further market share gains later this year, which will be a strong plus to its valuation outlook. The rollout of 2 all-new electric sedans is expected to enable additional penetration into China's fast-growing EV market, while the ongoing expansion across Europe is expected to further NIO's reach on the world stage going forward. And over the long term, NIO's introduction of a more affordable sub-brand is what will enable mass market adoption of its vehicles, driving further market share growth beyond the premium EV cohort. The stock's performance is expected to remain volatile in the near term. Start of consumer deliveries on the 3 new EV models, alongside easing supply chain constraints, are expected to catalyze NIO stock for a turnaround towards stronger uptrend momentum in the latter half of the year. Considering NIO's near and long-term growth trajectory remains intact, the stock makes an attractive investment pick at the current price levels. In the comments, you'll be able to find a playlist of all of my NIO videos. Make sure to check them out. Either way, thank you for hanging around until the end of this video. Once again, if you are interested for more NIO news, subscribe to my channel and get notified whenever there is something important going on with NIO or other growth companies. Have a very good day.